guys, in this video, we're going to talk about the naked put. Now, we already know how to purchase calls or purchase puts, and we already know how to place credit spreads and put on debit spreads. We know how to combine those and create iron condors. But today, we're going to talk about the good old-fashioned undefined risk, naked put, short put, or writing a put. All three of those phrases are interchangeable. It basically means the same thing. We're just selling a put contract with no protection behind it. Now, we talked about credit spreads in the past a couple episodes ago, where there is a short leg and a long leg. So you're selling an option and you're also purchasing an option, and that long option is protecting you. And to calculate our break even and everything, you always take the width of strike. So let's just go ahead and we'll put one on here real quick, just kind of make it easy. So we're going to sell the 14. We're going to buy the 12. We are in the May expiration Tilray, by the way. And you can see here, it's $2 wide spread. Max profit is 47. We're collecting 47. We cannot make more than what we're selling this for. That's 47 bucks. Subtract that from 2. That's our width of our strikes. 153 is our max loss. That's also our buying power. Theta is at 0.8, delta is at 11, because this is a neutral to bullish strategy, so positive delta. 69% probably a profit. So what happens here when we remove this long leg? Now, the long leg is protecting us because our max loss is only 153, okay? Now, what happens when we do remove this long leg? Well, probably a profit just went up. Delta drastically went up as well. Theta's up too as well. More credit received, so 68. And hold up, wait a minute. Max loss, $1,332. Now, how does that work? Well, basically, when we sell options, remember that we are obligated to purchase 100 shares of this underlying if we do get assigned. When we buy puts, the put buyer has the right to sell those 100 shares of the underlying, and the put sellers are obligated to purchase them. Okay, so if Tilray was to end or go in the money here, or this call is going to go in the money, so Tilray is going to go below 14, we would be obligated then to purchase 100 shares of Tilray at 14 bucks. Now, we do have credit received here, which is 68, so we would save around $68 on that. So we would be only paying 1,332 bucks for it, I guess, when you look on the bright side. But that's what that means. So that's why our max loss is so high, is because all of a sudden now we have a chance of being assigned, whereas before we really didn't, because we were protected by that longer long leg of our spread. So why in the world would anybody want to play this? Well, it's got to be in a stock where you do not mind getting assigned. So I usually like to do something cheap, Tilray. Let's just do skills. Skills would be better. Something in high IV we want to get in. You can see our IV ranks pretty high in here, and we'll just go in. We're going to sell this 25 delta 12 and a half right here. So if skills drops below that 12 and a half, then I would be on the hook for 100 shares at 12 and a half. And that's perfectly fine with me because it's trading at 15 right now. And I don't want to purchase it at 15. I'm fine with owning it at 12 and a half, but if it stays at 15 or it goes up to 20, I'm still collecting that 80 cents. So I'm still participating in the move to the upside, and there's no risk to the upside here. I don't care if it keeps on going up. The problem is I am limited in my profits or my rewards to only this 80 cents. So whereas if I do purchase skills, I've purchased 100 shares at 15, and then all of a sudden it goes up to 20. Well, there's what, like 500 bucks that I could have just had, rather than if I sell this 12 and a half and it goes from 15 to 20, well, I'm still only making this $80. So the reward is a lot smaller, but your win rate is always higher when you're selling these kind of at the money or out of the money puts. But again, if I do not want to purchase this, and I don't also think that I don't think skills is going to go up to 20 bucks. You know what I mean? So that's also another reason why I don't want to purchase up here. I think it's going to stay around here. And if anything, it's going to drop. So, and then it drops. And now I'm participating because now I'm buying it on the dip basically. And it's only costing me this 1,170 bucks. So we'll go back to Tilray, just to make things a little bit easier again. open up our May here, and you can see that our max loss is the 1332. That's going to be because of our 68 cents that we're collecting in premium. So we're actually purchasing at 14, but we're saving the 68. That's how you get 1332. And again, it's just you want to do this in stocks where you want to own these stocks, and you want to participate a little bit to the upside, but it's just something you don't really mind being assigned in. And again, once you get in here, you can all of a sudden get assigned at, you know what I mean, on your 14s, and then you can turn around and bam, sell a call against it. That's something we like to call the wheel strategy, and we'll get into that later. But again, this is a good old classic naked short or writing a put. Okay, guys, thanks, guys, for watching. Make sure to check us out on social media. We have attached the links to our socials in the description, and we also have a swing trading service if you're interested. There's more information in the description below.